Let's take a look at some information and charts on Avalanche for BraveNewCoin. So Avalanche is another proof of stake network with bridging capabilities, DeFi capabilities. And I've said this on almost every video now, but as these chains get more and more alike, they will lose identity and individuality unless they outperform some other chain in a big way. Throughput, fees, usability, interoperability. There's got to be a reason to bring people to the table here. So far, from many of these chains that aren't ETH, it's been on-chain fees, which is a pretty big reason to not use ETH over these other chains when you're spending hundreds or thousands of dollars transacting on ETH, where you could be spending tens of dollars transacting on Avalanche or many of these other chains. The distinguishing factor here is, from a fundamental perspective, what is the consensus model? What are the validators? What are the staking rewards versus supply? What is the inflation? If fundamentals tell you what to buy, technicals tell you when to buy, it's up to you to determine, to me or, to you, this looks better than this based on some fundamental metric. I don't have that answer. I just have information to be discussed, shall we say. So now that I've looked at many of these chains for many months now, they get more and more alike, more and more blurry as far as what does what and why and how it does it. They all say the same thing. So it's not like throwing shade at AVAX versus Terra versus Binance Chain. Right, I don't know the difference as far as what can do what better. I know what has better centralization versus decentralization. To me, Binance Smart Chain and EOS are some of the most centralized, whereas stuff like Luna, Tezos, maybe Avalanche is less centralized. Something with more validators is generally less centralized. More diverse validators. To me, Avalanche looks a lot like IOTA, if you know what that monstrosity is. It uses DAGs, and IOTA, the Tangle as they call it, has had issues maintaining consensus. Solana has had issues with uptime and maintaining consensus. So that'll eventually, ideally, kick into gear when people are looking at chains for fundamentals. Most people don't care, right? Most people don't care about governance. All they care about is number go up. I can do this on this chain. I can't do it on the other chain, right? Most people care about yield farming and scratching off the lottery ticket. I get it. But the staying power is in the fundamentals. So they're all going to say they can scale. They can have these TPS, right? They're faster, better, stronger than everything else. Block time is amazing. You hear everything from everybody because sure, why not? But if this one's faster, but it gets halted more, that's problematic, right? Bitcoin has been halted maybe once or twice ever. You'd have to look, it's been 13 years now. Happy birthday, Bitcoin. But you have to look at historically how early on that happened, how many times it's happened. We've had issues with governance on Bitcoin, obviously, with block size debate. We have issues from time to time with hash rate in China and all this other stuff. ASICs, right? The list goes on and on and on. It's not without its issues. But to say any other chain is just going to be amazingly better, time will tell, right? We won't, to me, it doesn't look that much rosier than Bitcoin. Bitcoin has a story. It's got a brand. A lot of this other stuff, DOT, Avalanche, even Ethereum to some degree is still trying to figure out what it wants to be when it grows up. So we're getting there. So there's a massive risk component with getting on board stuff like AVAX, for example, versus stuff that's been around and stood the test of time. Here's the meager and mediocre roadmap for Avalanche in Q4. They list some things here. Previously, I think they had like a naming service. Oh, there it is. I assume that's like ENS. And in general, another part of the identity discussion is all these chains are doing the same thing, just a variation on a theme, not really doing anything individually that's going to move the needle for a lot of people. The biggest thing is always going to be, can I gamble and get the most out of my money for free on this chain? That is ultimately what's going to move the needle for people, especially retail. They will use PancakeSwap. They will use whatever Tron has, right? Till they're blue in the face. They will love it. They will not know any better. They will not care. I'm not saying that's wrong. I'm just saying that's where eyeballs are right now. They're on SHIB. They're on PancakeSwap. Number go up sort of mentality, herd mentality, is not on discussing the fundamentals of pruning or privacy or dandelion functionality. Like nobody, let's be real, nobody cares about that in the aggregate, right? People who know about it care about it. The cyberspace, CryptoPunks, cypherpunks. But Joe Schmo has no clue. So the more they can build on chain for everything, the better. There was an ICO. They raised really not that much in the grand scheme of things, around 60 million from a bunch of sales in 2020. The supply breakdown is the typical, it's always a disaster to me to see this because it's all, most of it's pre-mine, right? Anything that's pre-mine is sacrosanct, I think is the word, or sacrilegious, whatever, to proof of work in Bitcoin, hard money, that sort of thing. It's incredibly easy to raise millions of dollars on a promise and then give it all away and keep the money, right? That's incredibly easy to do. That's why ICOs have been so successful. It's incredibly hard to create a protocol like Bitcoin and have that succeed in the face of Bitcoin existing. It's easy to say, look at us, we're great, we're amazing, we're better than everybody else. Give me your money. Have some tokens, right? That's easy. And the other thing you need to pay attention to is the supply schedule, which for most coins doesn't matter too much. I think HBAR is probably the most egregious in that they release X percentage of the supply every month. There's some vesting schedule there. It's one of the few coins that still has a vesting schedule that's ongoing. Link as well, pretty egregious in my opinion, the way they're selling multi-million-dollar amount of coin every month into the market. During a bull market, it doesn't really matter because the market will absorb that generally. At some point, obviously, supply demand kicks in and there's a tipping point and we fall over. And we are, what is this, almost December? We're super early in the AVAX token distribution. So I would love to trade this now and not hodl it into 2024 unless there's some groundbreaking changes to the protocol. That's just my first pass of it based on the supply schedule, right? It's just important to know what it looks like. What is inflation really going to be today versus next year versus 2050, whatever, right? And they also have multiple types of networks. I'm not going to go into it, but if you want to get deeper into this stuff, for me, it's similar to parachains, ERC20, ERC 1, 2, 3, 4, 5, 6, like whatever, right? These are different chains, different protocols, different consensus, and more variations on a theme. None of it is inherently bad. I don't think any of it's going to move the needle individually. My biggest issue when I see stuff like this is how does all of this consensus come together? Kind of similar to side chains in general. Maintaining consensus can be challenging at times, especially on an unproven protocol. I just expect issues to arise. It's better that they do because then they'll be fixed and patched and figured out. But this gives AVAX lots of capabilities that other chains do as well, just in different forms. And here's the consensus. And if you compare this to IOTA, again, it's very similar in my eyes, which is not a good thing because IOTA is a hot mess, has been a hot mess. I don't even know if the network's still running, but maybe Snowman consensus is going to figure out the problems of DAGs. I don't know, but that doesn't give me a good initial bias looking at Avalanche versus IOTA. It's important to look at total circulating supply of the coin. Obviously, the staking amount of supply plays a massive role in price. If a lot of that is being staked, then that means that amount isn't being sold. I mean, just look at ETH as a most extreme example. That is being locked up with a vesting schedule basically for multiple months, if not years, until proof of stake gets figured out. So that is completely wiped out of circulation. On top of that, they have EIP 1559, which is making ETH more and more deflationary. So that supply metric is playing a massive role in keeping ETH at least up, despite maybe fewer people using it relative to AVAX because of fees. But over the years, projects have learned this mechanic with master nodes, proof of stake, all sorts of shenanigans, which certainly helps price. As these tokens get inflated over time, it matters less if the staking holds as a percentage or increases. They quote their staking reward at 9.9%. Decent amount of nodes here. I don't know how many of these are cloud nodes on Amazon Web Services or whatever. That's something else you'd have to look into. Most of the nodes have the latest version. And the staking distribution for me, for any node that is involved with validation and consensus, I would really like to see who they are. Even in proof of work, we can generally see the pools that are mining. So even that's not anonymous. Because if this is, let's say 10 of these or 25 of these are all one person or one entity, then you sort of lose your decentralized factor there. All of these, it looks like all of these is that 3 million? However many million AVAXs could be an exchange, could be a variety of things, could be VC, I don't know, right? But it's just good to know who's who in this list because I can't comment or analyze on, how centralized these nodes are. I just have to assume that there's probably some problematic things in here. Like a lot of this is exchanges, a lot of this is in Asia, a lot of this is venture capital money, right? I don't know. Just some potential pain points there. According to stakingrewards.com, the rewards at 9.55%, and this is the key amount here, is after inflation, as a delegate, not a validator, which is where most people are going to sit, it's around 3.5%. Right now, as we speak, we can get 9% on USDC through compound. That's highly variable, more so than this is, but for a lot of people, they're better off just avoiding the volatility and lending through any borrowing and lending protocol. It doesn't have to be comp, but any place where you can get decent interest rates relative to legacy savings accounts are below 1%, basically 0.1%. So unless you're bullish on AVAX, which there's plenty of reasons to be based on the price chart, but unless you're bullish on that, you're better off just lending somewhere else, basically. TVL is at an all-time high effectively, which is certainly more bullish than bearish. Generally doesn't move the needle for most coins. I think what's more bullish here is to see more dApps get connected with AVAX. The more dApps that are connected to all chains, the better user experience in general. Maybe the bigger attack surface, the bigger amount of risk involved. But if I'm the protocol, I want more people, right? And if I'm a borrower or lender, I want the lowest rates, and I can get better rates if there's more people in the pool, let's say. Curve, another big one on AVAX as well. Yak and Joe. Where's Joe? Somewhere on here. Yeah, there it is, Joe. Yak, Joe are probably the two biggest as far as DEXs or AMM type of stuff. Joe has effective all-time high TVL, as does Yak, which is a DeFi farming application. It's almost as if most people, again, don't care what AVAX is. They just see the yield farming components, right? They just see the interest rates and they're like, yeah, sign me up. And that's fine. And that's kind of how it should be, right? You shouldn't really care. You should have to not have to, but you should understand the basic fundamentals of the networks here and have an opinion on that. But at the end of the day, just let the people do what they want to do, and that's a good place to do it through DeFi on Yak and Joe. AVAX USD, just like Luna, isn't going to win any awards for momentum up here, but it doesn't look bearish by any means. You got a declining volume profile, declining RSI profile, and just a flat price. There's really nothing going on here. It's above the 50, it's above the 200. It looks probably better than it did in February through May as far as a reversal risk, but it doesn't inspire confidence in me that this thing's going to go to 100 anytime soon. Maybe towards the end of the cycle when everything is lifting off, you'll see some later rotations into this. I don't think holding this is a problem as far as the USD pair. Not investment advice, but it's probably going to be fine. It's probably going to go to 100. It's probably not going to outcompete or outperform anything else, though. That's the biggest issue. If you're trying to get the most bang for your buck, you're probably not sitting on AVAX USD and waiting for the moon to come. You're probably putting money in Yak, or you're doing something else with it, which involves more risk, but the rewards are obviously greater. So I think very few people are generally just sitting on AVAX hoping for moon in the face of the other stuff. The cloud likes it too. It's still above the cloud, bullish DK cross. Everything looks fine here. It just doesn't look longable to me just yet. Holding it's fine. I'm not going to jump into this based on what that looks like. And then the real test isn't the USD pair. The USD pair for everything should do okay. Things will do worse than others, but ultimately you should be looking at the relative pairs. So anything against BTC or ETH specifically, or whatever the top two end up being, maybe even against Sol, DOT, whatever your favorite coin is, right? How does this look on trend? You can use the cloud, you can use the EMAs. On the cloud, it is breaking down below the cloud for the first time since August, really. I had a decent run here. So that's problematic. Something else that's problematic is the potential for this head and shoulders fractal. You might not even believe chart patterns are a thing. You might not believe this will play out as a head and shoulders. That's fine. But when I see this, alarm bells start ringing that this is a reversal type of setup. Bias is down rather than up. It may not match textbook criteria, but it looks good enough to me with trend weakness that this, in its current state, again, is not longable. It would need to get back above the cloud with a bullish DK cross. So currently the expectation for this is down. How far down? You can measure that by taking some fibs and checking out a level, but ultimately probably moves back to 55K or thereabouts sats, which is kind of a 50%-ish move. And against ETH, it doesn't look any better. It has a history in this zone of, this was a descending triangle breakdown that led to multi-month breakdown, but it has a history of breaking down in this zone. So the zone has been resistance before. And again, this isn't your textbook head and shoulders. It isn't really much of anything, but it doesn't look bullish. And you can see the head and shoulders here, in my opinion. I don't think it's pareidolia. I think this does look ready for an attempt, at least, a reversal. It's going to probably find some support at the 200-day moving average, but I wouldn't be holding AVAX over ETH or BTC here if I'm wanting to min-max my rotations or whatever. You know, there's a time and a place for rotating into AVAX. That time was more August, September than it is now based on trend. Lastly, let me just mention the ETH BTC fund and DeFi portfolio I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool where you can see everything, including AUM performance allocation, all of the vaults I'm in here on UniComp and Aave. And again, ideally, these vaults go multi-chain. You're just throwing something in a vault. You don't care where it goes chain-wise. It just does its thing, right? You get the best yield you can. So from a user perspective, all of this competition, I think, is massively bullish for yields at the end of the day. And you can also see the trades I'm making, the trades tab down below. All the trades go through ETH DEXs here, mainly Paraswap, but also ZRX or Uni exclusively, or Sushi or 1inch. But again, all of those DEXs can go multi-chain eventually. I doubt Uni ever will. 1inch more so probably has the biggest potential to go multi-chain, as they're a DEX aggregator that's already doing so. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.